Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 21st, 2025, and we're diving into the latest earnings report from ServisFirst Bank Shares. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ServisFirst Bank Shares has just released their third quarter earnings report, and there's a lot to unpack, from their adjusted earnings per share to their strategic financial maneuvers.
EPS and analyst forecast. Let's start with the earnings per share. ServisFirst reported an adjusted EPS of $1.30, which is an 18.2% increase from the same quarter last year. However, it fell short of the analyst's forecast of $1.38. John, what are your thoughts on this?
Indeed, the adjusted EPS of 1.30 cents is a solid performance, showing significant year-over-year growth. However, it did miss the forecasted $1.38, which might cause some concern among investors. The growth indicates strong operational performance, but the miss suggests there might be some underlying challenges or conservative estimates that need addressing.
Revenue and profitability overview. Moving on to revenue and profitability, ServisFirst reported a net income of $65.6 million and a net interest margin of 3.9%. They also saw a year-over-year loan growth of 7.9% and deposit growth of 7.3%. How do these figures reflect on the company's financial health?
The net income and net interest margin are strong indicators of profitability. The 3.09% margin, although slightly impacted by a non-accrual relationship, shows effective interest management. The loan and deposit growth are particularly encouraging, suggesting robust customer engagement and trust in the bank's services.
Operational efficiencies and future outlook. Let's discuss operational efficiencies and future outlook. The book value per share increased to $32.62, and liquidity remains strong at $1.77 billion. The return on equity stands at 14.88%, with an adjusted return of 16.21%. What does this mean for ServisFirst's future?
The increase in book value per share and strong liquidity position ServisFirst well for future growth and stability. The return on equity figures highlight efficient capital use, and the adjusted return suggests even better performance when accounting for one-time items. This positions the company favorably for future investments and shareholder returns.
CEO and CFO statements. In their statements, CEO Tom Broughton mentions solid profitability across all regions, while CFO David Sparacio highlighted the expansion of the net interest margin. They also discussed strategic reinvestment in higher yield securities. How do these leadership insights align with the financial results?
The leadership's focus on profitability and strategic reinvestment is evident in the financial results. The expansion of the net interest margin and the profitability of new offices reflect effective management strategies. These insights suggest a proactive approach to maintaining and enhancing financial performance.
Key takeaways. In summary, ServisFirst Bank Shares has shown strong financial performance with a net income of $65.6 million and significant loan growth. Despite missing the EPS forecast, the company's strategic initiatives and strong liquidity position it well for future growth. Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on ServisFirst performance in the comments below.
Thank you for having me. It's been a pleasure discussing ServisFirst's financials. Their strategic focus and operational efficiencies are certainly worth watching in the coming quarters.